Mixed signals across assets today. Let us cut through the noise and focus on what matters most. Welcome to MTRS_Market Pulse. Here is your complete Forex market briefing for June 6th. Currency markets are being driven by a complex mix of central bank policy, geopolitical risk, and shifting growth expectations. Let us break it all down. Here is a snapshot of how the major currency pairs are trading today. Euro to US dollar is trading at 1.15, losing 0.71% on the session. The world's most traded pair is driven by ECB versus Fed rate differentials. Currency markets are reacting to the international role of the euro, June 2026 European Central Bank. Pound sterling to US dollar is trading at 1.33, losing 0.68% on the session. Sterling is highly sensitive to UK inflation data and Bank of England rate guidance. Equity markets are responding to reports that Fed risks fueling a stock bubble by overlooking ARA-driven inflation, BCA. US dollar to Japanese yen is trading at 160.29, gaining 0.22% on the session. Dollar yen tracks the US-Japan rate differential and Bank of Japan intervention risk. Equity markets are responding to reports that gold slips as rising oil prices and inflation concerns temper safe haven demand, Yahoo Finance. USD SGD is trading at 0.7753, losing 0.54% on the session. The Singapore dollar reflects Asian FX sentiment, trade flows, and MAS monetary policy. Currency markets are reacting to the international role of the euro, June 2026 European Central Bank. Australian dollar to US dollar is trading at 0.7050, losing 1.19% on the session. The Aussie dollar closely tracks commodity prices, especially iron ore, and Chinese growth signals. Equity markets are responding to reports that Fed risks fueling a stock bubble by overlooking ARA-driven inflation, BCA. US dollar to Chinese yuan is trading at 0.1478, gaining 0.06% on the session. The onshore yuan reflects PBOC daily fixings, US-China trade dynamics, and capital flow controls. Equity markets are responding to reports that gold slips as rising oil prices and inflation concerns temper safe haven demand, Yahoo Finance. Now let us look at the macro forces behind today's currency moves. Geopolitical risks remain elevated. The move follows reports that crude oil prices today, Brent, WTI surge above $95 as US-Iran conflict escalates, Cryptorank. This is keeping traders cautious and supporting flows into defensive assets. Central bank policy is at the forefront of investor minds. Equity markets are responding to reports that Fed risks fueling a stock bubble by overlooking ARA-driven inflation, BCA. On the data front, equity markets are responding to reports that stock market news today, S&P 500, NASDAQ fall as chip stocks sell off after strong jobs report, ecx.org. Currency markets are reacting to the international role of the euro, June 2026 European Central Bank. Our near-term view on Australian dollar to US dollar. After today's weakness, the $0.6838 area is the first meaningful support level to watch for Australian dollar to US dollar. A stabilization there would be the first sign that sellers are losing conviction. This is our analytical view, not investment advice. Currency markets can move fast and unexpectedly. Central bank surprises, geopolitical shocks, and data prints are the key risks to monitor. Let us close with the key events and catalysts on our radar. Keep a close eye on central bank speakers and rate commentary, and key economic data releases. Any one of these could be the catalyst that defines the next major directional move. Hit the subscribe button and turn on notifications. We post fresh analysis every single morning. Leave a comment with your market view. We feature the best ones in future videos. That wraps up today's coverage from MTRS_Market Pulse. This content is for educational purposes only, not financial advice. Always do your own research. Stay disciplined, and we will see you tomorrow. That is your Forex briefing from MTRS_Market Pulse. Subscribe for daily currency coverage.